Welcome. As you all know, gold and silver has been hit very hard lately in the marketplace. And today, going to take a look at what has happened short term and also long term. As you see here, we start with the gold price chart, the latest year. And if we just relax here and look at the long term view, it's a very nice uptick here from under 3,000 up to, yeah, at the moment, $4,670. So it's still a lot of money made, and yeah, it'll be troublesome. The latest downtick here, a lot more volatility than we are used to in terms of gold. But as an investor, you often get complacent when things are going your way, and you believe that you have made the perfect bet. But suddenly, when things start to unravel, you you kind of get very suspicious that someone is trying to force things to happen. So let's break it down. What's really happening here? I also have a chart of the silver price. And while gold is more of a safe haven play, silver is even more speculative. Sure, it has some more use cases in terms of being in an industrial case, being in some AI products, being in solar panels, and the green wave. A lot of silver is required to make that happen. Especially in China, they have invested heavily in the green wave, and we do know that during 2021, 2022, a lot of countries in the West, for example, USA, Canada, and a lot of Europe, also when they had the money, were invested a lot. And obviously, this was the start of a boom for silver. And since it has just increased and compounded, and the latest year, silver has really taken to the sky, and a lot of people has basically said that yeah, why are we investing in stocks nowadays? Silver and gold is the way to go. Anyway, this is a massive decrease here from almost $120 down to under 80. The lowest here were 71, so a lot of people was actually liquidated here. And yeah, it's sad time for these people that has traded silver on margins and being highly leveraged to make money in silver. If you are, you can lose all your money in directly. And yeah, I think that is one of the reasons why we've seen this massive downturn here. So this is not normal. Having silver and gold downtick this fast is something very special, and it need to be studied more harshly here, because if you are going to invest long term, you want to feel safe, especially if you invest in commodities like silver and gold. And despite the silver having this long term industrial case, I think people need to feel relaxed and understand what's going on short term here, and if it gonna continues. So yeah, this is one part of why silver and gold in the first place has become so popular. So we have had a soaring money printing situation and debt to GDP situation in USA, and yeah, trillions has been injected into the economy, and the balance sheet for the Federal Reserve has just ballooned to levels that are hard to comprehend. So the velocity of money has been very hard. The quantitative easing has been massive, even though there have been some tightening since 2024. We see some QE accelerating again, because basically that is what this artificial economy needs. And yeah, lately this has led to some dollar devaluation and also, yeah, some sticky inflation, even though we do see that the inflation level has been so high for so long that now we're actually hitting some kind of ceiling here, where the production and the economy as a whole are getting hit a bit by the high prices. And this is actually leading to a deflationary pressure at the moment, I would say. And yeah, we don't want that kind of deflationary pressure that we have at the moment. I think trueflation is around 1% or something, but that is kind of um, a situation where it's a shake economy that leads to deflation. But what we want is the innovation to drive the deflationary pressure. So I think that means probably long term that we will have some intervention from the Federal Reserve, etc. Anyway, this money printing situation obviously makes people want to allocate their money not just in treasuries. So it's not just that U.S. treasuries has been hit. I think also Japanese treasuries and other countries has also ramped up their spending now on military equipment, etc. So the soaring debt situation here is not only in the US. I see it around Europe also, and yeah, Russia, China, etc. Every country here is printing money widely. So yeah, it's an global problem, and I think that is one of the reasons why a lot of people and also countries has invested heavily in commodities like silver and gold. Also, I think there was a lot of articles in the spring here that India and China were really ramping up their purchases of silver and gold. And yeah, when these type of countries really get the demand among their people for silver and gold, I think they can really drive the pressure and the prices upwards. Also, we have had a lot of conflicts lately around the world. We have the Russia-Ukraine situation, and that wasn't a short war; it's still ongoing. And the longer the war is, the more people probably feel like they need a long-term solution in terms of securing that the value of their money, and instead of holding it in cash, that actually drops in value when government and central banks are printing money. They can hold on to silver or gold or platinum or another metal long term, and that has served a lot of people very good lately. We have the Middle East tensions with Israel and Palestinian situation, and that is still ongoing, even though it's not maybe talked about as much at the moment. It's still ongoing. We have the Taiwan insecurity situation with China. Obviously, China is looking at United States and the situation with Venezuela and the conflict Russia, Ukraine, etc. And long term, they see Taiwan as a part of China. Obviously, if you know your history, that is hard to say something about. You can understand why China feel that way, and also Taiwan going so far west in terms of some values might end up in some kind of conflict long term. And yeah, we will see what's happened there. And anyway, all these kind of things are basically uh, driving the demand for safe haven kind of investments, not just bonds and treasuries and stocks. They want something else. And yeah, gold and silver has been a part of that playbook at least until now. And yeah, this has served countries like China, India, and Russia very well, very well, very well. Um, Also, I would say now we I just explained why the demand, and you did see the graph that has increased so much the latest year. I think a lot of people might take that for granted, but there are a lot of macro perspective that have led to this increase in value of gold and silver. Add to that also that when the value increases so fast, it attracts also traders and speculators, etc., and big bank and big hedge fund money. Anyway, now this is more what happened lately. Why did the gold and silver just turn downwards suddenly? Well, one of the things that happened was maybe a kind of a shift in the Fed policy, and not that the Fed just said that they're gonna change the rates at the moment, but we were told who is coming after Jerome Powell, and the name was or is Kevin Warsh. And this is a guy that is, yeah, he has that classic background on Harvard. I think it was Stanford also. And yeah, he's working at the big banks and is a guy that will protect the banks and not just being someone that the government and the elected president can demand everything from. And the marketplace might see this as something hawkish, that they maybe wants decrease the interest rate to the levels that the president of the United States wants, because If they do that, obviously the interest rates that the government pay will decrease, and they can spend that money on military or whatever. But now they keep the Federal Reserve quite independent, and this all obviously serves the big banks and big money. But also that leads to a more hawkish long-term view of what might happen in terms of the policies that Federal Reserve has. If they have to keep the rate steady instead of artificially lower them, they will do that. That is how the marketplace is analyzing the choice of Kevin Walsh having that type of person in place. So the shift there to Kevin also meant that long term, that maybe a bit steadily rates also means a stronger dollar, and a stronger dollar meaning that that might lead to gold and silver not being as valuable long term as some people might have thought. They ran away too fast because, as we laid out before, the shift to silver and gold was not just based on the useful case of it in terms of industrial and similar cases. It was also based on the belief of the value of the dollar, the money printing, the $1 trillion debt, the balloon balance sheet of the Federal Reserve, and also some policies from big countries out there. So when they see that the dollar might stabilize based on this choice, obviously these countries might change their way and start to buy more US treasuries again. And yeah, a lot of things are interconnected here. And this, some people say this was the push that really accelerated the downturn for gold and silver here the latest weekend into this week. And yeah, it was a massive, massive, massive change. And I think it's a combination of just the prices running very high the whole year. They can't run up forever. And also this little reality check here with Kevin Walsh as a new head of Federal Reserve. Also, this is quite important. We have the Chicago Mercantile Exchange, and this is a place where you have the largest derivatives and exchanges in the world. And this is the type of places where you are handling futures and options, commodities, etc. And yeah, when gold and silver gets hit like it does here, these kind of places need to adjust their margins when you speculate on derivatives and gold and silver at their exchange. This means that if you, for example, buy gold there or silver. Gold in this case, the margins has increased from 6% to 8%. So you need more gold on hand if you're gonna trade there. And if you have silver, the margins is increased from 11% to 15%. So basically, if you don't have the money, you have to remove yourself from the marketplace, and that put a downward pressure on gold and silver. Also, if you were trading and the silver and gold that you had in a position just decreased in value very fast, you might get hit with a margin call. And if you can't bring up the money, then you might be liquidated out of the market and you lose all your money. And that also leads to kind of this snowball effect where people lose their money and they know buying pressure is coming up and more people lose their money, more margin calls, and you have kind of a snowball effect until that snowball kind of starts to actually decrease in pace. And I think that is what made this extreme situation, especially for silver, having these type of margin calls, because silver is much more traded than gold. And yeah, I think you should understand that if you go into silver, maybe the upside is a bit higher usually, but also the downside short term is a lot higher. And there are no certainty in the commodity markets, especially when the type of upticks in price we have seen. So I would say it's much harder now to know where these markets are going. It was an easier choice before the uptick in prices. So the reason I haven't really invested in gold and silver long term is because if you look at these type of commodities long term, they have underperformed the stock market, and they have done this despite being use cases for both silver and gold long term, and also despite having a lot of inflation both in USA but also in different countries. So I just had a hard time to see the certainty of gold and silver being the way to go. But obviously, when buying pressure from big countries started to ramp up, and also hedge funds and institutional investing and then retail investing started to ramp up. If you did see that wave coming, obviously, I think you could have made loads of money, but I just hadn't read enough about it. So yeah, I missed that wave. But congratulations for you who did see this coming. Obviously, I did know that the inflation was too high, but for me it wasn't obvious that it was easy money on silver and gold, and that is why I wasn't invested. But in hindsight, everything is easy to see. So so what people did, firstly, people did not see silver and gold as volatile assets, and they maybe piled up into them. But when the margin call started to happen, when we had this market reaction here, I guess they suddenly became a volatile asset. And when that happened, a lot of institutions, hedge funds, etc., started to fly to cash, and I guess some retailers also did that, or they took home some some real cash from selling um, silver and gold, because they might found that when the FOMO situation starts to slow down, it's time to actually sell before it gets too hard to sell. Because selling gold and selling silver sometimes it's a bit harder than selling just your stock, etc. So um, this kind of psychology effects, they are more obvious here. So just to round this out, and I would say that don't see this situation as manipulation. I would rather say that this is more about macro repricing, as we said. And the increase in silver and gold has fundamentals. I think there are a long term play here also, but we should know that we have some macro repricing here. We have a situation where we have a new share at the Federal Reserve coming in. We have a new situation where the debt situation of the USA is getting more obvious, and I think a lot more politicians want to do something about it. So think about that long term. So if you like entered gold at 2K, it's a lot more cheap than 4.5. So it's harder now to know if this is going to continue. Even though I can see a long term case for both silver and gold, I would say I'm not enough well versed in that type of trading to enter myself. Also, we should understand that this was a leverage unwinding, and a lot of margin calls. And now, when it gets actually for a while more expensive to trade, I would say this will probably slow down the demand and the uptick in especially silver short term. Also, you should understand that if you use, for example, CME exchange, some people do, and you trade in gold and silver, you might have a leverage for 10x or 15x uptick. So maybe 1% uptick for the commodity will be a 12% uptick for you. But that also means that if it's the other way around, if the price starts to fall, you will lose your money very fast. And that is how some people have done a lot of money in commodities, but that's also how some people lose their money very fast. And that is also some why this kind of short-term massive fall happened for silver and gold. And yeah, this is the modern society, and the velocity of money is faster, and the speculative bubbles are actually hitting silver and gold more than we have seen before.